Can everyone hear me?
Yes, sure.
Okay, great. Thank you.
Yes.
Hello, everyone. My name is Mandina, and it's great to see you all this evening here at our FinTech Evening, probably the only FinTech event that you're going to have this year. And I would like to start with thanking our organizers, predominantly Pasha Bank and SAP VC, for organizing this event. And so I would like to welcome you all, our speakers, and also our attendees. First of all, I would like to welcome our keynote speaker, Mr. Roshan Najaf, who is a Deputy Minister at the Ministry of Economy of Azerbaijan. And I would like to give the floor to him to start. Hi, Mr. Najaf.
Thank you very much.
I'd like to hear from you.
Thank you very much. I would like to welcome all participants and to express my gratitude to the organizers of this online panel. It's my pleasure to participate in this event today. It has been several months now since the world is undergoing through a very challenging time. COVID-19 pandemic and the following crisis was unexpected and unique, thus making it even more difficult to tackle associated challenges. The pandemic had a huge economic impact on countries and their population. According to the June 2020 forecast of the IMF, the global economy will contract 4.9% in 2020, and the growth will be recorded only in 2021. The adverse impact of the pandemic has not passed by Azerbaijan, and amplified by the unstable oil prices, the economic activity in the country has lessened. The GDP fell by 2.7%, including the non-oil GDP by 2.5% in the first half of 2020, compared with the same period of the last year. But nevertheless, we believe that with every crisis, an opportunity becomes available, and we want to concentrate on opportunities and do everything possible to mitigate difficulties and build even stronger and more resilient economy. As you might be aware, the government of Azerbaijan has adopted an action plan on measures to reduce the negative impact of the coronavirus pandemic. This action plan covers short and long-term measures, and it allows to minimize the economic damage caused by the adverse effects of the pandemic. I'd like to note that this action plan provides the introduction of a new economic model in the post-pandemic period. One of the items in the action plan is about taking urgent measures for the implementation of the new model of economic growth in the post-pandemic period, and it identifies the digital economy as one of the main priorities of the state policy in the midterm. Thus, the government is keen to create an economic environment where emphasis will be given to digitalization, innovation, and ICT solutions. Government is currently working on development of the action plan for digital economy, which will cover, among others, digitalization of industry and agriculture, transportation and logistics, trade and investments, as well as fintech and payments. We also hope that the advanced role of the government in digitalizing its own operations and services, as well as efforts in creating enabling digital environment, will lead to further expansion of digitalization in the private sector. Just to reiterate, we have identified the digitalization of our national economy, the transformation of our country into a digital hub of the region with technological leap and innovative solutions in the long run as one of the priority objectives. During the pandemic, we saw a tremendous surge in digital payments, e-commerce, and cross-border digital trade and services. We saw that market players, including banks, retailers, and service providers, had to shift their businesses to online platforms, and those who were fast and agile succeeded. Timely adoption and implementation of the state program on expansion of digital payments in Azerbaijan for 2018-2020 paved the way to establishment of enhanced e-commerce ecosystem and digital entrepreneurship, adaptation of digital banking and emerging payment solutions, incentivizing cashless payments and enhancing cybersecurity measures. In addition, government is currently studying the adoption of law on payment systems and payment services, and we hope that all these measures will create an enabling environment for fintech development and expansion as well. At the same time, we also observe amplification of new emerging technologies associated with the fourth industrial revolution, such as artificial intelligence and machine learning, blockchain, distributed ledger technology, Internet of Things, robotics, and etc. These new technologies are potentially going to affect the implementation, application, and adoption of financial products and services, including fintech products. In this regard, it is worthwhile to mention the fact that Azerbaijan and the World Economic Forum have reached an agreement to establish the fourth Industrial Revolution Affiliate Center in Azerbaijan. This initiative of the President of the Republic of Azerbaijan is a clear sign of the importance given by the government of Azerbaijan to emerging technologies, digitalization, and innovation. Establishment of the affiliate center in Azerbaijan also shows a desire of the government not only to provide access to one of the most advanced innovation platforms, but also to bring the knowledge source itself into the country to ensure an easy and first-hand access to the prominent information and technology network. In the meantime, talking about knowledge and education, President of Azerbaijan, during his recent meeting with the Vice President of Microsoft, said that due to the pandemic, we need to rethink our approach to education and distant education. At the same time, government of Azerbaijan is undertaking steps not only to increase and systemize online digital education, but also to increase the digital literacy and awareness of the population overall. We also give emphasis to enrichment of the educational programs of schools, vocational schools, and universities with the classes that would increase digital knowledge and skills of their students, as well as to prepare professionals that would be able to meet industry for challenges. One of these challenges also relates to the data policies and cybersecurity management. Just as every other player on the field, fintech would also need to address the challenges related to information about payment history, privacy protection, KYC measures, third-party integration, as well as would need to meet compliance and regulatory requirements. In conclusion, once again, we want to reaffirm our desire and commitment as a government to build an enabling environment for innovators, startups, and smart specializations in Azerbaijan. And we hope for your support in this regard. And thank you for your attention. And I'm sure that this event will be rewarding for everyone. Thank you.
Thank you so much, Mr. Najaf, for your valuable insight on especially like current situation of economy and the changes and all that. And before moving to our next session, I would just like to introduce our moderator, who is Behnam Gurbanzadeh, who is the CEO and co-founder of PayZakat platform.
Mr. Najaf, thank you very much for your introduction and for these kind words. It's very important for all entrepreneurs as well as for bankers and all people in the market to know that state supports all intentions, all actions. And when you have a strong support from the state, from the ministries, from the agencies, it's very important for all business, in the market to feel this protection and to understand that the future will not be so easy as it was, but at least it will be with the people and the professionals who are with you. Just dear friends, so with your permission, I will start our session. And as I remember, our main subject will be fintech. And I'll give some, very short information, introduction of myself. So I'm currently working for Sberbank, Russian. I don't want to say it's bank. It's something like a new. It's a big fintech company. The bank which transformed from old part Russian banking system to completely new fintech business. And today, to be frank, and I'm very proud that I joined this team, and it opened my mind. So I saw, our bank, it's not a shop. It's not an only shop, for selling money and selling services. The bank could be transformed to a new type of business, to a new type of relations with the clients. And, in the market, we can create this bridge between the client and the company and become partners. Based on these opportunities, we also set up our startup within the local ecosystem, internal ecosystem of the Sberbank. And the startup is working today. So together with our colleagues and with the ecosystem members, we're trying to to integrate it to all ecosystem players in our fields, platforms. And we hope that together, this pilot deal will show us, gaps, advantages, and disadvantages of our business. So today on our panel, we have, professionals, people from their areas, and we have around 5 minutes to make a short introduction of our business. The introduction of ourselves, and discuss two main questions. The question number one, which I would like to discuss with all of you. So today, clients, they do not want to have any traditional services. They even don't want to carry a plastic card in their pockets. They don't want even speak with the bank clerks, with the people from front office. So they would like to have everything in their pocket, in their gadgets and smartphones. At the same time, they do understand that the most expensive resource is time. So based on this idea, I would like to give the first floor to Jalal, and as one of the biggest bank in the country, in Azerbaijan, the leader, to discuss and to give us a presentation. What did they do? How do they see this fintech? Because clients, they don't want to have banks, they want banking. So Jalal, please.
Behram Bey, thank you very much for introduction. I welcome all of you in this session. I hope you will find very useful information during this meeting. Of course, as the largest private bank in Azerbaijan, we start thinking about this digitalization of our services in early 1917 and start implementation of the strategy in 18th. First, our first digital product we launched in early 19. It was account opening. Online account opening. Now it was partially because of some legislation issues, but now this process is, after changing legislation, as Behram Bey said, we saw the support from government side, and we see that this legal framework changed very fast. And from this perspective, now we have fully online account opening for legal entities and individual entrepreneurs service. And now we have a lot of services. Of course, when we start this digital journey, main driver was that, as Behram Bey said, clients changed, and environment market also changed. We see a lot of competitors, not only in our country, but abroad. And we understand that we have to make something new. Of course, this change, not only IT type of change. Of course, IT is in this transformation takes maybe 10% of all our efforts. Most of change in our case, and I think in case of each company or bank, it's cultural change in mind of top management, in mind of ordinary IT or loan or any other risk guys. And of course, it takes more time than launching all these online products. Of course, it's was very hard process, but I think we are quite successful in this journey. At this stage, we achieve, I think, very good numbers. About 95% of operational interaction with our clients goes through online channels. We launch dozen online services to our corporate and SME clients. Of course, it's also helped us to increase time to market 2 times. It's also helped us to launch features in weeks, not in months, for example. Again, it helped us to face this challenge of pandemic and this economy stagnation. Of course, as other banks worldwide, we also faced the impact of COVID, both negative but also positive. I think from positive perspective, I hope that maybe not 100, but 99% of our clients already familiar with our online services and at some point already use it. Also, they understand that our bank became a partner, not a service channel, let's say. Of course, we launch a lot of programs to help our clients, discounts, a grace period for loans, all stuff around that. I don't want to take your time to explain what kind of support we make to our clients, but in general, our back and our agile mindset help us to move faster in this changing environment and help us to take right decision in very short period of time, implement it and present it to our clients. Of course, one of the challenge of this digital transformation, as you know, is also cybersecurity issues. Together with, if you're planning to launch some digital products, services, make this type of change and move all your clients to digital channels, of course, cybersecurity became a crucial part of your daily work. Of course, our main focus at this stage on cybersecurity and our next 3-year strategy focused around cybersecurity and fraud management issues, because we believe that we already have this, we already built this digital platform which help us to expand our business next 3 years. Of course, most of our guests know that Pasha Bank mostly corporate bank, and we focus mostly on corporate and SME clients, but also we have some small retail, niche retail appetite. And these digital capabilities, which we established during these 2 years, I hope help us to fast expand in this in niche retail, of course, because we have very developed retail market here in Azerbaijan, and it's very hard to expand very fast with existing competitors. But we see ourselves as a niche player in retail. And of course, I think what we have done and with team which we have at this stage in our bank, I hope it also helps us to move fast in this direction. Of course, again, as mentioned earlier, this digital transformation of banking, of banks, it's inevitable, it's unavoidable. It's a very popular phrase. It's new norm, let's say, and I think if you won't change, if you will not change, you will lost your position on the market. And take into account that we are willing to maintain and have a place on this market, we continue with this transformation and expansion and investing in all new services, technologies which help us to provide our customers more convenient, affordable, comfortable service right here, right now, and immediately.
Okay,
just brief.
Yeah, that's quite interesting. And you mentioned very nice, connection, the bridge between corporate to retail. And I mean, I'm taking this opportunity just and to pass our next word to Stepan, because they're really good in business when we can take the bridge from big corporates to retail markets. Stepan, please, the floor is yours. And if you can tell us about your experience, how do you see the digitalization of these connections, between big corporate retails, please?
Yeah, sure. I want to start with a small introduction. So my name is Stepan Shevchenko, and I'm in charge of international partnerships in Russian payment service provider Yandex Money. Once again, I want to say thank you for invitation to this event, and it's a great pleasure to be in such an amazing company of experts and professionals. So to start, I want to stress that in Russia, online banking and payments are very advanced. And it's actually like years ahead than same industries in Europe or in US. So personal banking in Russia provides more than just opening a bank account and paying for your utility bills. So now banks are giving a whole infrastructure to help user to gain access to like multiple services, including like insurance, investments, cellular networks. More than that, it's some small things like ordering a taxi or booking a table at your favorite restaurant. You can even make a purchase on some of the marketplaces through your banking app. So all this combined creates amazing personalized experience that goes beyond banking to a lifestyle application and services, both for B2B and B2C. And like same as like for us being mostly B2B company that provides payment solution, it's not only about acquiring anymore. So we offer more than 15 payment methods to our partners. We created a whole set of necessary tools for the businesses of different sizes and different industries. We do have multiple instruments like installments platform, offer wall, B2B marketplace, and many others. So the idea is to create like customized offer to our merchants that can be tailored to each and every one of them. And if we talk about like banks and like this like transition to like banks and retailers and the pandemic, so everything that's been happening for like last 6 months, I guess, in Russia. So I guess like pandemic was a great showcase of how banks and other businesses in Russia can adapt to new conditions. So some of the banks were used to work from home, so the transition for them was pretty smooth, but it's obviously not every one of them. I mean, it's very important to understand that basically banks had to make transitions like to fully like online processes and make all processes and secure, which is super important, available online, not only for their workers, but for their customers as well, which is a key element. And same with regarding B2B or B2C. And I think even though pandemic situation was very critical for businesses in general and the economy, like it still showed like those companies, those businesses who could evolve and survive and were able to keep their clients, that they mean that they will probably get a huge boost after like the whole situation will stabilize. Will be stabilized. So even though it didn't seem like an opportunity at first, it is actually one of them. So, and this is like a great example of how like we adopted and what we handled with. So obviously we had increasing numbers of applications and requests to start accepting payments online. And we also received a lot of requests from our merchants asking for help because their current payment provider wasn't like responding for a couple of days because there was a company that couldn't make a proper transition to like work from home model and home office. And obviously they just lost their clients. Their client base just came to us. And obviously, since like we were their service during all this time, they will stay with us after the pandemic. And I mean, if we talk about the industries who were actually winners after the pandemic, I believe it's everything related to online education and everything entertainment related. So obviously some of the people lost their jobs and they wanted to learn new skills, maybe to like start a new job or start their business. So everyone started to study a lot. Others just had more free time because everything is closed, parks, bars, restaurants, theaters, everything. So they're just playing games, watched every series on Netflix, watched listen to all podcasts on Spotify. So basically everything that's related to consuming online content of any kind. So those companies were like very, very, very happy with this lockup, as you may say. So for our company, like for me personally, main challenge with this transition is the fact that you don't have live communication. So everything is done through Zoom. And of course, like working in an IT company with open-minded people, with very open-minded atmosphere, like we used to having ideas and projects born just by having a lunch or a cup of coffee. And it's very like, it's very open-minded and it's very quick. And obviously you don't get the same type and same level of connection via Zoom conf calls. I mean, I hope it's not sounded like anti-advertising, but yeah, it's still, I guess, this is the reason why I really want to go back to the office, because this is something that me personally, and a lot of my colleagues missing on, is the live interaction where you can actually giving you more, giving you better feedback, and better response. So.
Stepan, so as I understood, so COVID was, is market positive for your company, and the second wave of COVID will not be so bad, yeah? Yeah. Okay, Elu, thank you for this information. So, we understood and we saw how it was in Azerbaijan, in Russia, and I would like to give the next word to Tamas, and I suppose it will be interesting to know how do you know this B2C connection, if you had them, how do you develop it, and what kind of impact of COVID did you monetize, or maybe you can use it for your company for future advantages?
Thank you very much, and thanks for the invitation. So a short intro. My name is Tamas. I'm CEO and one of the founders of Raisin. Raisin is a company which offers marketplace services to banks, so that we organize for them full service listing and marketplace integration of their savings products. So we are based in Berlin, but have offices in Manchester, in New York, in Madrid, and we have a bank in Frankfurt. So we have acquired a bank last year, and the product is live across all European countries, including the UK, and also in the US with a B2B angle only in the US. We have roughly 300 employees, main service being the savings marketplace, where we service around 97 different banks from 26 countries. So we have likes of UniCredit, Klarna, AIB, Investec, and many more. And beyond those services, we have some investment services for clients. We have own robo-advisor in Germany and pension services, a company called FAIR. So that's more or less the description of the business. Towards the B2C, so our bulk of our business is B2C business, so we go directly to the consumer. Although we offer the service also through an API through third party. So third party service means that through an API, actually any financial services firm can integrate our savings product choices to their customers for any segment. So we have Commerzbank working with us on corporate segment. We have Legal and General in the UK working with us together, and Yolt, Scalable Capital in Germany, and some others. So that's about the company itself. Now towards the implication of COVID. Also for us, not a nice topic. I mean, we have multiple locations. So first of all, we had to take care of safety of people. We sent them home cross-board much earlier than the government prescribed. We switched the customer service also to remote locations. And we also bank operations, because we run our payment services ourselves. So it's we have also servers on site. So it's a location connected activity we have, so that we had to change some things there. On the customer reaction in general, there was a market correction in March, and at the same time a very steep decline in interest rates, which influences our products. So in the UK, our best product on a 1 year term, for example, plunged from almost 2% to 1.2% right now in a matter of 3 months. So that's a noticeable change. On the other side, of course, there is a flight to safety, and people want to have deposit insured products on the other side, plus flight to digital as well. So what we've seen is that the interest of banks and consumers increases over time, especially when the bank branches are closed and when their own bank struggles to switch actually to fully digital services, which ours were from the beginning. So we are on the market for 7 years, and our main and only channel is actually online only with phone support. In terms of the outlook, so what do we think will come out of this? We hope that we will learn and adapt. One thing where we adapted a lot is remote work. So remote work will be part of our future interaction, and we have very positive experience with it. So that anything from our product boards to morning huddles and evening events and beer drinking happens now remote, so almost everything. We think we do not lose efficiency in this one. The second thing is a drive towards digital for banks and customers. We see that the regulator wants to empower and enable more of digital services, especially Germany being very conservative on digital onboarding in practical ways, and wanting a verification of the customer identity in a face-to-face conversation, even over a video. But we see positive dynamics, no real change, but positive dynamics there to enable more digital-only services and digital signatures there. And the last thing is, I think we will see implication on bank balance sheets. So our model is actually interaction with banks, and we have a partnership model with banks. So that we work together with more than 120 financial institutions in total. And that would be a stressful one. I think for the first time since the crisis, it's a situation where actually banks were on the positive side of it and supporting their customers and still giving out credit and holding towards the credit lines to the corporate customers. So in that regard, I think it's a crisis this time not triggered by the banks, but where the banks played until now a positive role. And we hope that they will manage through the crisis well and emerge with a much more digital business model 1 or 2 years down the road.
Thank you, Thomas. Quite interesting. And really, personally for me, I just mentioned a number of interesting matters. So we can discuss it after our panel session. So you have very good ideas. Maybe we'll have any integration platforms in the future. So Bülent Bey, if you don't mind, my next question will be addressed to you. And I read a lot about your company just after our introduction, 2 days ago. It's quite interesting, especially about your innovations and your relations with the client. So if you can give us, short introduction and to speak about your general activity and how do you see the impact of COVID to your business and to the clients?
Sure. So thanks again for the invitation, and it's a pleasure meeting you, all these gents in their respective areas, very successful guys. So a little intro. For the last 2 decades, FinTech, I founded the first electronic money company in Turkish market. It is around 3 million users. But as all the gentlemen told, the onboarding, digital onboarding, or like classic getting users was very hard for a banking account in Turkish market as well. And what we have to wait was this pandemic. So after this, I guess this is a big paradigm shift. Every country, including Germany, I guess Azerbaijan and Turkey, we now have digital onboarding very easily, and the banks are now fintech friendly at the moment. And banks are not the great what said by Bill Gates decades ago, but today I guess we see a lot of this with cooperation. All the big banks are more open to cooperate, and what we offer as Colendi was we created a modern credit scoring algorithm, which is a very important thing, I believe, because everything is a commodity, and there's a very good chance that every big company will be a fintech company. If they have millions of users, like utility companies, including energy or otherwise, if they reach their customers, they can definitely embed some profit share on the transactional services that they can offer as commodity or as lending or as wealth management or other ways. So this is what I believe at the moment. And Colendi is in the market for the last 3 years. We developed a lot of interesting products. We saw a huge impact with this pandemic for us, and now we can offer our services to more big names. And actually, banks are more friendly to fintech ecosystem, and we are working with great banks. Hopefully, this will impact in a very good way for the fintech ecosystem development, I guess. The regulation is still a heavy burden, but it needs to be a heavy burden at the moment. But there is a big opportunity for potential startups to cooperate with big fintech companies or gorgeous banks that they can definitely leverage their potential services. And I guess all the great things were said because of this fintech pandemic, after pandemic fintech ecosystem potential. I believe there are a lot of fundamental change that has to be done in the regulatory framework that has been done as of today. And hopefully we will see a lot of interesting developments around countries, and hopefully again cross-border impact of this will definitely much easier for countries like us as well, because at the end of the day, moving money is still a big issue, or getting a digital KYC or digital identity doesn't definitely put fraud cases away. So the security still is a big issue as of today, I guess. And hopefully with these ecosystem network effects, I believe conferences might be much more heavier for all of us to meet in any place, Istanbul, Dubai, or Baku. But today, I guess we all fulfilled our responsibilities for the company and get onto the Zoom and reach millions of people or thousands of people, whatever. But it's a great asset to have.
It is, yes. I'm 1% with you. So, we discussed about banks, we discussed about the clients, about retail people, about ecosystems, about the platforms, different areas like Turkey, Europe, Russia, Azerbaijan. And, but, if we put everything together, we see a big and a new subject. So the next question is to Sergey. Sergey, sometimes I decided that such companies as a Boston Consultancy Group, they know better than bankers what is in the bank. So better than us what's in-house, out-house. So I would like to ask you a question. So really, how do you evaluate this situation? Can we play this role? Can we be more, digital friendly? Will client be happy with us? What's the information from the market, please?
Thanks, Behram. So again, like other participants, thank you very much for invitation. Amazing opportunity. A couple of words about myself. So I'm managing director and a partner at Boston Consulting Group, or BCG. And I'm a consultant, and I'm helping banks, I would say traditional banks, to become much more digital, to do their digital transformation, mostly in Russia, but also in Azerbaijan, unfortunately in remote mode right now. I will try to summarize some of the discussions. I think you guys all mentioned the right topics already, the pandemics, how it is important to become more digital. I would touch a little bit the topic of digital transformation overall and what's happening with the banks and how they start interacting with fintechs and how we see it going forward. So for the last 10 years, there were many discussions about who will win, this fintechs or banks. Like 10 years ago, it looked like the nice fintechs will beat the banks because the banks were super slow. They were very slowly moving. The customer experience was horrible. And all the fintechs, they were amazing. They were very reactive. All the services were innovative. So it looked like the banks would become some sort of infrastructure providers like mobile operators, and they will never be like a face for the customer. They will never be a consumer brand. But I think many of us, frankly speaking, I thought the same way like 10 years ago, seeing how slow the banks were to adopt the change. But we were wrong. So over the last 5 years, I would say there was a real digital revolution in the banking industry, and many banks started their digital transformation. And by this buzzword, what we mean, they started taking customer journeys, like end-to-end customer journeys, like product by product, service by service, and they started moving them to a much friendlier format, thinking how it would be better for our customers to interact with us so they don't waste time, so they can use their mobile phones to interact with the banks. By doing this, they also started changing their IT landscape, and they started changing the way the bank works overall. So they started moving to agile teams, moving together business and IT. And it happened actually very quickly. So I'm most familiar with the Russian markets. And like 10 years ago, when I worked the first time with Sberbank, which was like a ministry back in the time, super bureaucratic, slow, extremely unfriendly. And now, as Vietnam mentioned at the beginning, it's more of an ecosystem of various fintech services. They attract the best talents, and they are creating cool features that the entire market repeats. And it's just 10 years, and I think this speed of change is accelerating, and I see it now happening in Azerbaijan. So the first players started changing, and this change will happen maybe in 3, maybe 5 years. So it will be very fast. So there are a few important theses, like if you thought. First, This is a game where the winner or a few winners will take it all. So the banks that do not adapt, they will leave the market. Even if they have good customer base, even if they're working with large corporates, they need to change. Of course, it is applicable more to retail banks, but Jalal will also, I think, confirm my words. It's moving to SME space, and I think it will also move to corporate space, because the clients want to interact with the bank anyway in the way that is comfortable to them. So it's important to change. So there's no other choice. Second, there were many discussions today about the fintechs, about the startups, how they can feel themselves in this new environment. I think in the markets, especially like Azerbaijan, fintechs can actually help the banks changing. So they can become a part of the ecosystem. They can develop some of the services for the banks. They can create marketplaces that connect the banks. By working with banks in digital transformation, I see that many of them struggle culturally to change. I mean, they play a little bit with agile. They start with a couple of teams, but they struggle to really transform the entire organization. They lack talent. They lack young people. They lack the ideas. It's just a cultural problem. Especially in Azerbaijan, we see this as given like good visionary direction of a bank is not sufficient to create enough of this culture. They need fresh blood. They need fresh ideas. So the startups should be actually pretty open to collaborating with the banks, and the banks should allow them to work together as one team. And third, the state should help. That's actually very important. I think it's about a simplification of licensing and reducing some of the bureaucratic rules. So allowing some, for example, allowing online identification, moving forward with electronic signatures. And I should say Azerbaijan is super advanced in that. You can do many things completely online with Asan Imza, with electronic signatures. But there are many more things that the state should introduce. The simplifying regulation and helping with other topics. So I think there is actually a good future. This pandemic, I think, will really open the eyes of slow changers. It's important that all three players, the banks, the state, and the startups, really learn how to collaborate. But I think the pandemic will push them towards that.
Thank you, Sergey. And to be frank, we have only 1 minute. So I suppose all our partners, all our panelists, they did good introduction and answer to our question. I would like to finalize our session, guys. And first of all, thank you to people who organized this panel, this FinTech event. I would like to say thank you to all of you. It really was very interesting to discuss. And if we finalize, our today's discussion, so I would like to mention 3 main theses which we found out together. The first one, banks should change. They should change, and if they want to be in the market, they should change. The second thing, it should be cooperation between FinTech and the bank. It doesn't mean so bank should run after the FinTech or FinTech should run after the bank. They should cooperate, and they have to create the sole ecosystem. And the third one, after this cooperation, and the changing transformation, I suppose they have to be fast, because clients, the client demand, it's changing every hour, every day. And in order to fit this change, fintechs and banks should consider each other not like a competitors, but generally partners. So that was our main discussion. And Madina, I suppose the next word is yours. So thank you very much to all guys.
Thank you, everyone, especially Mr. Kurbanzadeh. So I think the main take from this session is that change is inevitable, and everyone should adjust to the change, and they should be, fast while doing that. So we're going to take a short break of 10 minutes, and we're going to be back here right after exactly 10 minutes at 7:55 with Mr. Khan with our next session. So stay tuned, and we'll be back soon.
Thank you.
screen through the conversation if there is any questions on the YouTube. If anybody has a question, if they post it there, you just post it on the private channel here to me. So I'll ask the audience then.
Okay, sure. So we're back after our break, and we'd like to proceed to our second session, which will be moderated by Mr. Khan. Mr. Khan is the CEO at Point Incentive. So Mr. Khan, the floor is yours.
Okay, is it live?
Would like to start? Yeah.
Okay, perfect. نحمد ونصلي على رسول الكريم الحمد لله رب العالمين أما بعد أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم. Good morning, good afternoon, and good evening, ladies and gentlemen, wherever you are in the world. I welcome you all to session 2 of this exciting event on FinTech. First and foremost, I thank the organizers for organizing this. The first session was quite interesting, and we had great speakers talk about their respective expertise. Before we begin, I'd just like to take this opportunity to state our thoughts and prayers go out to the people affected by the horrific events in Lebanon. So just a moment, I wanted to express my thoughts to them. So we have an exciting panel of speakers today who are right now dispersed globally. We have Ram, he is in the Silicon Valley in the US. We have Simon Hardy. He is based out of London. However, he is currently in Tel Aviv, Israel. And we have Pedro. Pedro is in Lisbon in Portugal. A brief introduction on each of our esteemed panelists. Ram is an expert in product management. He has an engineering, tech, and a business development background. That's his expertise. He is leading founding products and tech groups and startups. He's a go-to guy in Silicon Valley. He has a very strong track record in advising successful startups, and that's especially those that are making an impact on society. Beyond his startup advising, he also lectures and he conducts workshops across different geographies. One fun fact about Ram, he's all tech now, but his childhood dream, he wanted to be a sheep herder. So good to go, man. That would have been an interesting career choice. How do you pursue that? We have Pedro here, Pedro from Lisbon. He's the Executive Director of Nearsoft Solutions and Near Banking. Pedro is a software engineer. He's obsessed with FinTech and the development of digital banking products. Before founding Nearsoft and Near Banking, he worked almost 18 years, Pedro, am I correct? 18 years as a software engineer. And the last 12 years owning, managing, and maintaining architecture roadmaps of complex, large products and environments and platforms. He's helping institutions in Europe and Africa redesign their digital banking platforms. So he understands the digital banking landscape very, very well, and the problems that banks essentially have with their legacy systems and how do they scale up to the digital world. He loves to plan and implement and modernize and replace the legacy processes. They have a great product that I learned about. They have a financial services product, especially for the visually impaired people. 4% of the world's population is essentially visually impaired, and they have no way of essentially accessing financial services digitally. So their product is something interesting, and I'd love to know more about it. I'm sure the audience would benefit from knowing about that too. Fun fact about him, Pedro is a cat lover, and currently he doesn't have 1, not 2, not 3, 4. He has 4 cats with complex personalities. And he is learning from cats whenever possible. And he learns apparently complex projects from these cats as well. And last but not least, we have Simon Hardy. He's a co-founder and CEO of Indexable. He is a global financial services and innovation research and analytics expert. He's a scale-up and innovation acceleration practitioner in MENA and Africa and emerging regions. Currently, he is leading a fintech and a startup acceleration advisory firm out of London. And he will obviously talk more about it, but it's a global fintech index. And the way I understand it, it's a Google for fintechs, essentially. It's an equivalent of Google just for the fintech arena. He has been with Dubai Chamber of Commerce as well. and he's a link between fintech and financial inclusion for Newsweek. That's about our speakers. Brief introduction of myself. My name is Mohammed Shahid Khan. I spearhead a fintech startup based out of Dubai. We are focused on elevating the pains in the loyalty points industry, offering financial solutions to large corporate SMEs and retail customers via a digital platform and a wallet. I worked for about 2 decades in banking and launching businesses and solutions in over 7 countries. My mantra is taking moonshots and keeping an eye on the future. I'm a firm believer that in business, the only sustainable competitive advantage is the ability to learn faster than your competition. So a brief fun fact about me, since everybody got a fun fact, I'm a globetrotter. I love to travel, and I normally aim to see about 10 to 15 countries in any given year. However, post-COVID, like everyone else, I'm sitting in my home office. What is interesting is that all my shoes think that I'm dead now. So with regards to today's session, the big techs burst into the scene. Okay. So there's a famous quote by Bill Gates in 1994, and he said, banking is necessary, but banks are not. And this served as the mantra for the first wave of fintechs. We saw a plethora of fintech startups mushrooming around the world, each trying to take a slice of services away from incumbent banks. After the last financial crisis, it was believed that banking would be disrupted. It would be a death by 1,000 slices. So all of these small fintechs would essentially come in and take away the entire business of banking, and it will be disrupted. Well, post that, the situation isn't the same as we expected. Fintechs and banks, we understand, work best when working together. Now, the question that we will pose to the panelists here is, have the banks accepted this? Are they open to partnerships, collaborations towards innovation? Interestingly, August 1st was the World FinTech Day. And I just sometimes wonder, is there something that we really need to celebrate? Have we actually seen a fintech revolution the way it was supposed to happen, that this will be a disruptor? And if you think I'm being harsh, then let's take a look at a survey done on 800 companies that ranked financial services as one of the least innovation sectors in the economy. One of the least, not even the top half of the table. And which sector is more innovative, banking or textile? And apparently textile is more innovative. I mean, given the financial institutions spend so much money on innovation, on consultants, and so we thought that would have been the game. But no, this survey was by, and I will quote, RSM International Finance, and they surveyed about 791 companies in 33 countries, and that was the whole mainstay of their survey. So the question that I would essentially also ask you guys, has the fintech revolution started? So we started with the fintechs, we started with the banks, they will eat them up, and that didn't happen. Now, lo and behold, we have these huge big techs also eyeing the financial services industry. They have a presence everywhere. They have an amazing net promoter score. So will they take the financial industry by storm? Will the congressional hearings that we just recently saw pin them actually down? So today in our conversation, we will be talking about big techs, we will be talking about fintech, we will be talking about banking, about open banking, operation, innovation, and we'll be talking about the way forward. So I take this opportunity to ask Simon, if you can kindly tell us more about Fintechsible, about the work that you guys are doing, and your thoughts on everything that I mentioned, and your opening statement, please.
Thank you very much for that, Mohammed. So Fintechsible is a new company we launched last year. We're building the world's first, we have built the world's first open source database of fintech innovation globally. We've kicked that off with a large, first of its kind, we think, automated rankings of fintech ecosystems. We basically looked at all the fintech innovation that we can find, basically companies by location, and pulled that through an algorithm to score fintech ecosystems based on the quality, quantity, and business environment of that location. And we're doing that as a mechanism to then build a large, as I say, open source networked database of fintech companies that anybody anywhere in the world can go to the map and see the range and breadth of companies that are located there. So we can share the link to the index afterwards. But obviously the question is, why are we doing that? And ultimately it comes down to our belief that, you know, it's our firm belief that fintech, you know, digital finance as a whole is geared or has the potential to solve global problems. That being said, geography, your location, is quite often a deciding factor on how successful you are. That being that a company that's based in Kigali is probably 100 times less likely to be successful than a fintech company based in London, purely by default of the location. And it's our view that that's not a sustainable position in a world that is increasingly online. And of course, you know, we're now in the middle of a pandemic where consumer behaviour is being forced to change, and you know, both the industry itself and consumers are having to transact more digitally. So basically, we want to use this opportunity, this portal, to really enable much greater visibility and therefore greater connectivity between fintech innovators and investors and potential customers. Now, turning to the whole big tech conversation, I think you know, what one has to realize is, for me, I would say what one has to realize is that, you know, the big five. Let's focus on the big five US technology firms that are going through these congressional hearings. They clearly have opened our eyes to the sheer potential of digital. And they have equally, you know, and therefore, and the value that kind of business can create, and hopefully through the congressional hearings, they will start to make more of us aware of the challenge that the digital markets create. That being, you know, the opportunity for enormous monopolistic power. Somebody had done a graph of the S&P 5, so the big tech 5, versus the S&P 495 over the last 2 years. The S&P 5 have delivered 5 times the value in terms of market capitalization of the rest of the 495 put together. So clearly there is, you know, something needs to change. Something is wrong there. And I say wrong, which sounds rather judgmental, but it is wrong in the sense that if we as an innovation community don't get access to data, and of course, you know, the problem of the dynamic of digital is that you end up in this infinite loop where bigger gets bigger. If that's not addressed, then the kind of things that we're trying to do, and other fintech innovators, and indeed any other startup ecosystem is trying to do, or startup company is trying to do, falls to nothing. So, you know, I think it's my view that, you know, somehow, whether it's big government or whether it's at industry level, whether it's even at the level of the UN, there has to be some sort of agreement on how one frees up and enables, democratizes ultimately greater access to data, because, you know, there are initiatives, and fintech is probably leading that fray. Sandboxes, academic institutions, you know, there are initiatives to enable innovative companies to get better access to data, but I'm not sure it's enough, and I think it needs to be done on a more joined up level, because there are great opportunities there, but those opportunities are only available to us and to innovators, even to the existing incumbent banks, to be honest, if you know, if there are some sort of parameters on enabling more equal, more distributed access to data.
Right. Thank you, Simon. But what about the big techs? Do you essentially see them entering the foray and taking away massive business away from the existing banks? Do you see that actually?
I mean, in short answer, you know, it depends how one looks at it. Because what's happening with digital is that our concept of bank is changing. The definition of bank is changing. We're living in a much flatter world. So the big five have demonstrated that it's not about whether you're a bank, a bookseller, or an electronics retailer. It's actually about all of those things and how you occupy or annex adjacencies. And that's the challenge for the banks, really, is that psychologically the world has flattened. And I think that's the problem for them. The banks think in bank terms. They think in terms of risk and trust and all those good things. And now, of course, they're trying to think in terms of the internet and digital and how they compete laterally. And psychologically, that's not really that possible for them. So the opportunity for banks is to work with smaller players, but that comes with lots of risks in both directions. It's difficult for smaller organizations to work with big incumbents and vice versa. But I think the big challenge is that, yes, if banks can't adjust psychologically to this flattening of the world, the platform marketplace is going to render them irrelevant over the next decade.
Right. Interesting thoughts. We will definitely build on it as we move forward. I'll invite Pedro right now to give his opening statement and his thoughts on the subject matter.
Okay, thank you, Mr. Khan. First of all, I just want to thank the organization for having me here. It's a pleasure. I'm currently the co-founder and executive director of Nearsoft Solutions. We are a company that helps financial institutions to make the digital transformation. We work mainly in Africa and Europe, so we have the contact with very different realities in terms of this digitalization. We, as you said, with Near Banking, that is the suite of products we have, especially targeting the niches of users that have disabilities or find hard to use digital channels or digital banking products with security and in the way they can feel safe and can do their operations. So we give special attention to that part of the population because as we see the aging problem in some European countries like France, Germany, Portugal, Italy, Spain. So the average age of the population is getting higher and higher, and that is an important part of banking clients that need to be addressed and to be included in this digital transformation. Regarding the product you discussed, it's in 2017 we went to Web Summit in Lisbon, and we decided to make a different approach of digital banking, and that's when this Near Banking idea and the first product came out, and we are happy with this, and we believe that this is another opportunity inside of the many opportunities that we have on fintech and financial institutions to develop new products. About the big tech discussion and also the COVID situation and the impact that this is having in the fintech or in the digital banking, we see that the big five is something that all banks and all banking platforms has to see, that if we don't start to share information, if one bank isn't already have in the mindset that they have to communicate and they have to share data at this stage of the situation. It will be very bad for them, because if these verticals like Alibaba, Amazon, and all the others, they will start collecting, and they are already collecting. They will start sharing a lot of information, and all this information will lead to new opportunities for banking and other financial institutions, fintechs, to work above these big platforms. Also, we believe that on this transition, the culture inside the banks are very important. The way they look at fintechs, they have to see fintechs as partners. They have to have a culture inside, especially on their board of decision. It's important for them to have someone that knows technology, or someone that understands architecture, one architecture of technology that they can upgrade, that is scalable, that is prepared to integrate. Otherwise, it will be almost impossible to survive on the next decade, or maybe on the next 5 years. We already seeing, I see banks that already attached to monoliths and big mainframes, and they have like armies of developers, and every time they need to change something, they have to drag this army of developers to do small changes. And that time that take to react to market is painful for them and for their clients, and they start losing clients to more agile banking institutions, to a lot of fintechs. So this is all about the way we approach the evolution, the architecture, the open banking opportunity. We cannot see more, and it's not it's not a good thing at the moment for banks that are not using standards for integrations, for example, or they keep doing their customizations inside core banking systems. They need to pull out this customization to small products, small module. Use, if possible, fintechs, more and more fintech services and products. I believe in a scenario that many banks, the ones that survive the impact, start using white label fintech products inside their offerings. So they with all the data they collect from big techs or partnerships, they quickly adapt the offering of products to that client behavior. So this is the way I see as an evolution, and the only way to make the transition now. The organization that only with COVID they start to do this transition, it's maybe too late. So the scenario has to be, or the strategy has to be a really really fast move to modular systems, if possible cloud systems, starting as soon as possible as a hybrid environment with some in-house legacy systems, but start migrating as quick as possible to some cloud services that can manage in more efficient and more fast their business necessities, and easy to integrate new products. And banking is it was already changing very fast, but with COVID it was really the trigger to lot of institutions start as fast as possible this transition.
Right. Thank you for your views. So you are also in agreement with what Simon essentially mentioned, that the definition of banking is changing, and there's this proliferation of platforms essentially, where, like you said, white label. You see them white labeling solutions of fintechs and that sort of form of partnerships. After I'll invite Ram and come back. I would really like to dig deep on the cultural aspect that you mentioned in terms of whether they are actually ready to embrace that. Do they see fintechs as partners? And I would essentially say that perhaps it also would depend on geography, as Simon mentioned, that it is something, depending on what geography you are, institutions would be more receptive to these fintechs essentially to partner with them. But having said that, now that we're living in this borderless sort of world, what would the case be? We'll talk about it in the next round. So now I'll invite Ram. Ram, the floor is yours.
Thanks for having me. Super excited to be here, guys. I'll extend a little bit on the background as an opening statement. So I have been in the industry, in the technology industry for a while, but my foray into fintech was only the last 6 years or so. And I worked for the 2 of the big 5. So I've had experience there, and as well as working for smaller startups, and then now into fintech. So I can connect from some of the common trends and themes. So in many ways, the opportunity is really understanding the customer, the data, and the technology. And as we are talking about, the big banks and the incumbent banks, one thing why there are certain gaps compared to how the fintechs treat their customer and the big tech treat their customer, I'll start with that notion. One of the things that happens, and even in my own personal experience, again, to layer what Simon said, banks have this notion of a fixed rhythm or a mindset, and they may do things in necessities to check balances and make sure, the risk and the fraud and the security is good. But as a result, it adds a lot of process to the customer. If I go into a bank and if I have to fill a form, and if you're doing it for the very first time, trust me, it is very intimidating. It is not inviting, and especially if you're a Gen Z or a Gen X, and that's an opportunity that the banks have to understand the totality of what the definition of bank is changing and how customers are embracing and being open to that mindset. So I'll kind of layer some of the thinking from where some strengths and gaps from the banks are, and in what ways the big tech are leveraging their strengths in their customer base, in acquisition, as well as in data. And then also talk about fintechs and some of the enablers and then kind of like finish the thought on where this should lead into the discussion of kind of enhancing and fostering this whole financial ecosystem. So from a big bank or bank perspective, beyond the customer angle, a few things happen, right? Like there are several departments and siloness in a way that they operate. So for example, if I'm a customer and if the same bank is approaching me to say, hey, refi your mortgage versus save on your high yield savings, or actually take this credit card, it is oftentimes confusing what I should be doing as a customer. And oftentimes, the way the existing system has structured is, you grow your departments and you want to reap the higher cost or like the lifetime value from a customer. But then in the process, we oftentimes leave the customer out and not really thinking for the whole and the wholesome journey the customer is having. For them, it is money at the end of the day is a means, right? It's a means to live their life and a lifestyle. They don't want to be thinking about money all the time. And in fact, to quote a survey done by Standard & Poor's, the global literacy, financial literacy, only 33% of the world is financially literate. The question to bank, and this is a question to everyone in the ecosystem, including the fintech and the big tech, is now whose problem it is to fill the gap? The rest of the 77%. is our role in educating them or our role in taking the burden? And this is where the big tech stands out. Like, take the example of Google's 2019 I/O conference. The theme was, how can Google do more for you on your behalf, and not you be in the driver's seat necessarily, but actually take all the burden out of you. So take this analogy and apply on the context of you filling out a form in a bank. Like, what are the necessities that you have to do everything on your own versus the bank taking the burden? And in a way, like to extend like Mohammad's aspect of how does big techs leverage and how are they changing the dynamics on the financial services? Like big techs are great in few things, right? Like one thing being like data. And while in contrast, banks do have this data somewhere sitting, I'm sure, and they are leveraging, but not leveraging as much as the big techs, right? In a way, the big techs operate is they are harnessing this data and rapidly testing and making the life simple from a customer experience, and the user experience stands out, right? It is simple, it is inviting, and so on. And some of the ways that already the big techs have accelerated is through the payment systems, and it's largely been striving around payments. And as part of your checkout, you're offering a lending product where you don't have to go and find out a loan or think about whether you have overused your credit card, making fixed payments possible. So what I would like to say, that trend or theme is actually the big tech are embedding finance into different parts of the customer journey across the internet, right? Like, and that's where the big techs have the major advantage. Now, talking a little bit on the fintech side and what the gaps between the bank and fintechs are, and as you guys would know, starting fintechs company is often harder than other companies, right? Like the domain is harder for easily two reasons. One is pretty complex infrastructure, right? Like it's not easy to start a bank. There are multiple layers of infrastructure that you ought to seek and build and get that expertise. And by the time you're done doing that, probably, you're going to be lost 2 to 3 years, and you have lost your opportunity to be that startup that becomes that, the shiny object. However, a rapid trend is happening, right? Like how AWS have changed this overarching industry across the board on making services possible, and everything is consumed in API. The same goes from the financial ecosystem. There are several platform providers and enablers. Again, Simon touched on this aspect as well, but fintechs are taking advantage, and so should the banks do. The second complexity for fintechs is regulatory. It's hard and it's a challenge, and each country have their own set of rules and regulations. In some countries they don't. But regardless, the world is much flatter. To take the quote from what was mentioned before, it is possible now that the ecosystem can evolve much faster because of the AWS or APIification of these different stacks in the financial stack. Now, as kind of to close out, what's something as an incumbent bank you should ask is, digitization is not about just translating your offline strategy into online. It is not to take everything that you put offline and make it online. I think this COVID is a silver lining in that, as a learning opportunity where you can really ask and peel the layer and ask the question. When customers come back to the branches, like understand and ask and learn from them, what did they miss the most? And I would be surprised if, they missed like 100 out of 100 things. There's probably the 10 things they missed out of the 90 other things you have to offer. So really understanding those opportunities and leaving away your kind of the legacy system mindfully, and looking for opportunities to be at the, as an incumbent, be in the driver's seat to take the opportunity to partner with companies, including the big tech, right? Like I'm sure like that is an opportunity. The question is, how do you capitalize on that? Open banking as it stands, you're not going to share all the transactions, or perhaps if you do, you're not going to share the the data that probably sitting somewhere, which is to do with your actual customer behavior, the mindset and the goals. How have they gone through the different parts of navigating their financial journey? That is something inherent to the bank as a proprietary data source. So how could you take advantage? How could you leverage the fintechs? And it could partner, or you could also think of M&A opportunities. So I think like banks should take those changing trends and themes and start to innovate and be at the driver's seat of driving this forward. That would be my remarks there. Hey, Mo, you're on mute.
Thanks, Ram. Really appreciate it. Come back to Simon right now. Simon, I want to build on this definition of banking. I want all of three of you to opine on this as well. Just a minute each on the proliferation of these platforms right now, essentially. I mean, where do you see this leading towards? This definition of banking that's changing. I want to see a view of what's happening in this landscape in the next 18 months. Where do we see it in the next 5 years? What do we see in the next 10 years essentially happening? Naturally, there will be, do you see a consolidation of what first we thought it was going to be unbundling of services? Are we seeing a bundling of services subsequently as well? So I just want to hear your views, all three of you, a minute each or a minute and a half each in terms of the future. Simon, if you could start, please.
Yes, of course. Thank you. Well, I think bundling, unbundling. Clearly the rebundling is already happening, and we know. We think. Well, I think most people would agree that that's because the dynamics of just doing one thing in a digital world. The value, the income from transactions is just not there. And of course, the whole point of data is to be able to enable and much easier facilitate cross-selling. So I think we're certainly going to see more of that. In terms of consolidation, also quite likely. I mean, I think the big institutions that have got the budgets to do this stuff and have really got the budgets to kind of to pivot their organizations, and I think it really is a pivot that we're going to go and see many of these bigger organizations go through. They may not be so interested in buying up smaller banks, but I think we will see a hollowing out of standalone financial services institutions. Smaller banks, mid-sized banks in markets have a great opportunity, but where they don't have the budgets or the culture, I think we're going to see a hollowing out of the marketplace largely. And then I think it's ultimately it's really all about the platform. Those organizations, whether they are in digital only consumer services, not necessarily strictly financial services, or whether they are a bank with the right mindset, we are just simply going to see much more of the platform model. Whether that's and quite likely that's not banks not doing that themselves. They're going to work with the likes of Finastra or Temenos, working with these platforms that they can sort of plug in on the cloud, and then work with third parties that way. Because I think working individually, a bank working individually with a third party fintech innovator, I just don't see that working unless that company is at a certain scale. We've certainly worked with fintech companies, and the story comes back always the same, which is it ends up in an existential risk to the fintech themselves, because they get lost in trying to navigate their way through the protocols, through the compliance and the procedural and the procurement routes through these large organizations. So I think we'll see more of this platformification, and it'll be hybridized. There will certainly be more incursions from digital only players into this market, but there will also be large financial institutions that will look at how they platform themselves, and I think mainly that's going to be use of cloud and working with the bigger platform providers to enable financial innovation to be plugged into that platform that they are connected to.
I'd like to add on what Simon said. I think quickly. I think like if we think of any of the ecosystem, and marketplaces are a great example of the unbundling of what we call as the Craigslist era. Instead of having 10,000 things on topics, like there are several companies that focus on one vertical and go deep. And oftentimes when they go and focus so deep, more fundamentally in the financial industry, there are only few areas where there is scope for large economics. So once you have finalists on one, there's oftentimes the aspiration to grow and start to rebundle. But it's also important from, as I said in my context, which is solving for the whole, and it's not just part of it, like understanding the whole customer financial journey, and rebundling is the way to think of providing solutions that by and large. That's why I think like once you're specialized in an area, you oftentimes see companies go and expand on other verticals, and more it becomes a horizontal layer.
Thank you, Ram. Pedro?
Well,
on the architecture side as well, love to hear about the complexities of these startups trying to navigate in terms of servicing banks and the proliferation of platforms. Floor is yours.
Well, I think it will be quite natural, and I think also that it will be quite fun to see how the big platforms will monetize the use of their platforms or those APIs. The financial institutions or the big techs that have the ability to work with this data to have the better algorithms and in terms of artificial intelligence on top of this information will also make business and monetize the use of this information through their APIs. And that will be another revenue stream for these platforms, but also for fintechs that can be very specific or very specialized in one specific product or niche of products. I see that that will happen more and more.
Gentlemen, closing remarks. I just want 2 to 3 key takeaways. 30 seconds each. Ram, Simon, Pedro, anyone? Closing remarks.
Happy to kick off. I mean, I think from what I would say, I mean, I think this always comes back to the fact that quite often at the industry conferences, people come back and say, well, the banks are still here, and the banks still sort of dominate large parts of the market, and one could argue that's the case. I think what's really interesting though is that the consumer and the pandemic is going to accelerate this. The consumer is adopting fintech in a big way. It may not be that they captured enormous chunks of the value of the marketplace yet, but they are adopting fintech in a big way. The UI runs a global survey now of fintech adoption. There are several markets. I think the UK is sort of second or third globally, but there are several markets where in excess of 70% of consumers are using some form of fintech. So it's certainly proved its ability, its staying power, and I think over the next, particularly over the next 18 months, because of this sort of partial lockdown and sort of coming through this pandemic, I think any organisation that's got a switched on way to enable customers to be onboarded smoothly and seamlessly without too much pain, obviously remotely, and then to offer services that are relevant to them at a time of need or at the right point of need. There's a massive wide open opportunity here, and I think it's going to be a very interesting seeing what happens. To offset that, however, of course, I think the landscape, the marketplace for innovation funding is going to change over the next couple of years because of the pandemic, and I think there is going to need to be some sort of action or activity somewhere that enables money to keep flowing to innovative companies in wherever they might be found, if the progress is to be made towards, or continue to be made towards, financial inclusion and enabling more people to get access to fair and more progressive financial services.
Thank you, Simon. Really appreciate it. Ram?
Yeah.
2, 3 key.
Sure. 3 quick thoughts. I'll make it one sentence each. So be it banks, big tech, fintech, first, simplify for customers, take the burden out of their financial stress and journey. The second thing I would say, especially on the bank side, is, you have several of the proprietary data that is not accessible to others. Start harnessing and leveraging and embracing the change. And third, and this question for everyone, like, and oftentimes a provocative one, but let's say if the human race have migrated to Mars, how would we reimagine the financial ecosystem? That'd be it.
Interesting.
Yeah.
Thought-provoking thoughts. Pedro.
Well, I hope to see that this COVID situation and all this uncertainty that we have at the moment about the future help organizations to shift the culture and risk more and share more. I also, based in our experience, I hope to see that some countries, especially in Africa, in Asia, still development countries adopt more and more fintech as a vehicle of development and inclusion. We should not only see fintech products in developed countries, but also in these countries. They are making some fintech companies are doing a huge job helping these populations and these countries to develop and use money. So that is also a big part of this ecosystem. Not only big banks, the big fives, but also have these small fintechs that sometimes do magic things for millions.
Thank you very, very much. With this, we would be closing our session today. I really appreciate Ram, Pedro, and Simon, all three of you, for taking the time and having this great, enlightening conversation. My just closing thoughts is innovate or die. That's a message for banks, essentially, and that's for all organizations. So unless they do that, there is no, as an entity, they would essentially lose out. Thank you, everyone.
Thank you very much. Nice to see you all.
Thank you, everyone. So thank you for your, again, like this is always interesting to see, fintech people, especially this discussion people who are, really passionate about fintech, its current situation and the future. So we're gonna have a short break of 10 minutes and stay tuned again. We'll be back in 10 minutes. And thank you again for joining in and, sharing your insights. And we are back again after 10 minutes after our short break to the final session of this evening, with the FinTech Evening, where we'll be discussing again FinTech topics again. And I'd like to just introduce our moderator, Ekber Bey, Mr. Ekber Vazlı. And I think the topic was about, is FinTech boosting financial inclusion? So is it? The floor is yours. Thank you.
Thanks for a great introduction. Let me thank the organizers for collecting such a great people in one place for this great event. So a couple of words about our company. The Allcredit itself is the aggregated platform. We are helping, we are boosting inclusion by ourselves. So what we actually do is to collect the financial services and the products of the banks and insurance companies within the platform, so people actually could easily select the product that suits them well. And then I'll fastly switch to the questions. Our topic today is about the financial inclusion and the notion how the fintechs could boost this inclusion. We have great speakers from different countries, and I would like to, my first question will be targeted to Hassan from Payments. Hassan, could you please tell us more about your startup and how actually you help masses to have the access to the financial services? Hassan, you are muted, I believe.
Hello, good evening to everyone. It's a pleasure to be here to share experience and learn from valuable participants. I'm Hassan, co-founder of the Payments. Payments now is a payment technology provider company which started with providing payment solution for the social commerce via messenger apps, and now covers all aspects of the payment. Why social commerce? Because when we started, we saw that social commerce is growing, especially in emerging markets. People are starting to use these social media platforms as a marketplace because there are millions of people as a customers. They already know how to use it, so they use it in their daily life. They can post the photos, they can make the chats. So, and now it turned it to in their life as a business partner. But there was missing a payment solution because they were finding their customers there. They were dealing with them in the messenger applications. But when it was coming to the payment part, the problem was starting. And most of them, especially social commerce users, starting as individuals, so not as companies using it more for advertising, but social peers as a selling point. And we say, why not to give them this opportunity while they chat and close the deal with their customers in the messenger app and make payment there. And we founded Payments, and we give the opportunity for the individuals which were not able to get a payment solution from the banks or the payment providers, and helped them to increase their business. Eventually, it went good. They started to be able to accept payments, make installments into 12 months, and it helped them to grow their business. And in that way, we also grow it with them because when they were growing, they started to need other solutions. They started to open the shops. They started to go to the bazaars, and finally they went to the era where they established their own e-commerce platform, and with the different solutions under 3 categories. Payment with messengers for the starters, mainly for the individuals, which is in the Facebook Messenger, WhatsApp, and web payments. And then we created for them collateral solutions, which is collateral for mainly SMEs and the QR payments. And then we passed, when they grow it to the final stage for the e-commerce, and we were providing the e-commerce solution from the payment store to the APIs and the plugins.
So basically what you are saying is that you are actually lowering the barriers of entry for the people, especially not only in the city centers, but also in the, remote locations, right? So at this stage, at this stage, when we're talking about the payments through the social networks platforms, they actually people use on daily lives. So I'd like to pass the word to Nina from the Contactis. As far as I know, they have such kind of solution within their system, and if we consider the fact that the Contact itself is a very huge platform with millions of active people monthly using it, it will be great to hear Nina's perspective about that. Nina, the floor is yours.
Yeah, thank you. So dear colleagues, I'm happy to be here and thank you very much for the invitation. And yes, if you don't mind, I would start from general and I would say some words about VK in general. And then I move to specific and tell you something about our approach to payments and to fintech. So VK is a social media, social network with more than 97 active users per month, 97 millions, of course. But I must say that only 70 millions of them are from Russia. So VK is quite popular in this region. And of course, users come here not only to chat with friends or I don't know, just to consume content. They upload photos and they can buy internal currency, so-called votes. So by votes, you can choose stickers or gifts, digital gifts in app. So at the same point, VK began to grow from this media to the whole ecosystem based on content. For example, I must say about VK Music, maybe some of us know about it. So it started as a spontaneous file hosting, and now it turned to a full-fledged service. Over time, it began to be available by subscription, like Apple Music or Spotify or other musical services. So in addition, VK has various types of business represented on our platform. So from small companies to well-known brands all over the world, not just in Russia, but for example, Prada or other fashion brands. They, many of them initially considered VK as a platform for communication with consumers and only use our targeting to advertise some services or maybe goods. So now in our communities in publics, we develop order and delivery, and we have a lot of agreement with a logistics company just to give the user opportunity to make a decision right now at the moment. So if I would like to buy a t-shirt, I want to do it now. So we have to be flexible and have to be ready for it. So this was the start of the idea to create our own fintech startup in VK. So it's called VK Pay, as you may know. So naturally, we were very, I don't know, we have a lot of concerns that a lot of users don't have a payment pattern. So since the existence of VK Pay, it began to take shape. And I must say that now VK Pay is a full-fledged payment system with inside social work. So it is a wallet, electronic wallet for individuals. It's a platform for person-to-person transfers and a tool for accepting payments for companies and other legal entities or for individuals who want to sell something small, I don't know, like postcards or other things. So cumulatively, the portrait of our average user is can be presented like 65% of them men and 35 women. So core audience of aged 18 to 25. And this is our core audience with which we work every day. So I must say that this portrait was formed due to the fact that at the start we made a great emphasis to sell only online products like games, and that's why later we decided to develop different groups with different ages. So now we have a lot of, for example, services for daily payments, like state payments, for or you can pay for mobile phones or something you want to buy, for example, in small publics. So this boosted very, it has boosted development of our online to offline services. Now under VK brand, we have taxi or delivery and food delivery. And we have our own cashback service. It's called Checkback. Cashbacks are transferred to your VK Pay account, so you can really spend them on every services without leaving VK. So this is our general approach to money inside the social media. So if you want me to answer the question, is FinTech boost our financial inclusion? I must say yes.
So actually, I mean, I have a brief question for you. I mean, because you mentioned that you mentioned some interesting points about the delivery and the music streaming service. So I mean, you have the VK Pay, you have the delivery, you have the cashback service, you have the, I mean, you have lots of, let's call it different projects or the startups within the VK Pay. So it seems to me that you are building even the bigger ecosystem. I mean, it's like the WeChat or something like that. And I've read a couple of days ago, I've read about the super app. So you're actually trying to build a super app. So you'll increase even the number of offerings to the people. Can you elaborate more on that, please, in with a couple words?
Yeah, of course. We are trying to make users happy, so they have a lot of needs, and you must be very flexible, as I said before, just to give them an opportunity to take what they want right now at the moment. So 2 years ago, it was only feed with posts or memes. I hope you understand me.
Yeah.
So, but now we have a feed with, for example, goods, and we have a lot of machine learning algorithms which help us to give something that this exactly person wants. And we know a lot of our users because we are social media, as you may know. So this is the main idea, to become a super app, and we now something like this, I hope. So yeah, WeChat and our colleagues in this market, for example, Tinkoff or Sberbank, they have the same ambitions, but I think that we have more opportunities to become super app in Russia.
Well, best of luck with that.
Yeah.
So let's move to the next question, and then we'll do the next speaker. Then my next question is about the banks and how actually banks could benefit from the fintech, because in most of the times bankers, when the bankers think about the fintechs, they see the fintechs mostly as a threat, but not as an opportunity. So I'll pass the floor to the Shota, which is actually working with banks, with a couple of banks in Georgia, and I think Georgia is a great example for this case. And Shota, could you please give a brief description of what you do and how you help banks to create the better products and services so that every player within the industry could win?
Hello, thank you for having me, and thank you for all the organizers of this evening. It's very exciting to be here. Basically, Opti.ai is a company which builds an AI products for the banking industry. And we started the company 3 years ago. And you know, the fintech itself is considered or was considered as a territory where all the companies are competing with the banks, and they are trying to create products where they, you know, change the way how people get the financial services and so on and so forth. So we sometimes say that we are on the other side of the fintech, where we don't compete with the banks, but we actually collaborate with them and help them to you know, move forward in this competition. And that's very important thing, because actually banks are very conservative organizations, and there are a lot of reasons for that. And while they are quite technologically heavy companies, most of the time there's the innovation inside the bank is very slow, which creates a lot of opportunities for the companies like us, because as we say, we help banks to innovate with the speed of startup. And what we do actually is that we have a huge experience, more than 15 years of experience working inside the bank. So we understand very well the problems that are inside the bank, the business problems. And then there's a technology, and we take the technology, we take machine learning and AI approach, and on top of that, we build products that solve these real life problems for the industry. And we have few products in that direction, and I will briefly tell a little bit about that to give a better idea how banks, and on top of that, the customers of the banks actually benefit from all that. Yeah. So one of the very hot products for now, because of the situation around the world, is, for example, remote identification products, right? Which gives the opportunities to banks to give the people ability to either onboard or get the banking products without physically going to the branch, where sometimes it's almost impossible. Or maybe you are from the small city or rural location where not necessarily the branches are located. So, for example, we help banks to do a remote identification and onboarding of the customers, which actually increases the financial inclusion of the end customers of the bank, because now they can have remote access to some of the financial resources, which maybe was a little bit harder before. On the other side, as I like to say, financial inclusion is very broad term, and we can put everything under this term, right? We can put starting from the loans and ending with the personal finance management. And we see that there's a very fast growing trend around Europe for the financial personal finance management abilities, which are built inside the banking applications. And not necessarily all the banks are good at that. So we help banks on the other side with the solution where we do a transactional data enrichment, where we take all the retail transactions and analyze those transactions and enrich that information with the categorization, with the merchant information, with the locations of the actual transaction, and so on and so forth. This, on the one side, help banks to understand their customer base way better than they do right now. And on the other hand, it gives a better understanding to the bank customers where they are spending their money and what they are spending their money on, because it's one thing that people think they spend on their money, and the other thing is what actually is happening. And most probably, and most of the time, this is quite different. So this increases the understanding of their finances and transparency of their finances. And the last step where we actually help banks is the conversational interfaces, right? So we have new generation, so-called millennials, which quietly are becoming the economic workforce around the world. And they have quite different approaches to the money management and quite different expectations from their banks, because again, they are used to new technologies and new companies, while banks are quite slow in the adoption of this new stuff. So we provide banks with the white label solution where customers can use natural language and can directly speak with the bank representative chatbots, not only getting basic information, but doing quite a difficult stuff and doing transactional banking and doing personal finance management and almost everything that can be successfully done in that channel. So in that terms, if we look from that terms, we help banks to target very specific segment of the customers, which is today maybe not is the largest segment, but tomorrow will be one of the largest segment and main segment on which banks will be targeting their products. So that's briefly what we do and how we help the banking industry here in Georgia and hopefully very soon outside the country.
Well, best of luck with that. I mean, your simple example is a great notion that, I mean, it gives the feeling that they are the ways and with which the fintech actually could work with banks and that could benefit, I mean, all of the players. And I'm passing the floor to the Gani from the Kazakhstan. So Silk Road, he as a former banker who actually worked for the, I mean, couple local international banks operating in Kazakhstan. Now Gani is actually working shoulder to shoulder with the banks to create the multi-lender digital consumer products to help the masses actually to integrate to go to the e-commerce. So Gani, the floor is yours. Gani, you are muted. Yeah.
Okay. Right now it's okay? Yeah.
Yeah, that's great.
Okay, good evening, everyone, and thank you for having me. It's a great opportunity to take part and to listen what so-called like other colleagues are doing in different parts of the world and have this kind of opportunity to describe about myself, my backgrounds, and what we're doing here. So basically, I would say technology, I think it's a tool, an instrument, and the more tool and instrument you have, I would say, the higher coverage you have in terms of client base, in terms of like financial players, everything like that. So coming back to our company, like our company was set up 2 years ago, and we're the first, I would say, in the region, at least in Central Asia, who got MasterCard affiliate membership. We have our own in-house payment processor, which is being certified by MasterCard, and within the next 2 months will be certified by Visa. And we have several licenses. We have traditional license issued by Central Bank of Kazakhstan. We have license in International Astana Financial Center, and we also shortlisted in Dubai Financial Center as well. So we have several products, and one of the products is, as you mentioned, the so-called digital platform. Basically, what we're doing is actually so-called in terms of when we talk about financial inclusion, we include online shops because due to many reasons, I would say banks are not so eager to work with many of them because like the first questions they usually ask what kind of turnover you have, everything like that. But at the same time, we have, I would say, large number of small and medium shops who are thinking to open and give opportunity to their customer to pay by like cards and then do online shops. Because I wouldn't say thanks, but because of coronavirus, because of everything like that, even small shops right now thinking how they can attract more customer through their online. And in addition to that, what kind of financial instruments they can give them so that they will have more sales, like higher average check, everything like that. So what we do is actually our so-called lending platform can work in both ways, where merchants can provide customer with their installment-based payments. And our platform also can work as a so-called brokerage platform, which connect funding institution, not only banks, but microfinance organization, even pawn shops, because for them, I would say it's a cheaper way to attract customer, because customers are already there, because they already shop online, and customer or shop online, and they're looking not only for goods, but they're also looking for convenient financial solution. And what we do, actually, we provide that kind of solution in terms of like providing installment-based payment. And at the end, we connect a merchant with the bank, so-called we include merchants who might not be, I would say, interesting for banks, but we include them. And by including them, providing them different financial options, we're giving more opportunities for final customer to do shops. Plus, what we do is actually, we also have so-called card sharing platform. In the world, we have, I would say, like 2 billion people who are unbanked or non-banked due to many reasons. I don't know, like, for example, prudential regulation, remote areas, physical infrastructure. So like our card sharing platform actually allows to share, I would say, your limit or balance with your loved ones instantly, and people can do shop and do purchase or even pay offline as soon as they get that kind of like transfer from their loved ones. So basically, in short, that's what we're doing. And if you have any additional questions, I will be more than happy to answer. Yeah.
Well, that's great. Thanks for answers. And I would like to pass the floor to Tamerlan, who is actually also operating in Kazakhstan, but he has a slightly different business model than you. So Tamerlan, the floor is yours.
Hello, listeners. I represent Payday Service Management Service, and I want to represent it in the presentation. Can you log on demonstration of the monitor? Thank you. So Payday helps companies not to think about the financial problems of the employee, since the employer has the opportunity to receive an advance payment for the working period without contacting the employer. How this happens on behalf of the employer is presented on this slide. First, an employer whose company is connected to the Payday service sends a request for an advance payment for the working period. Next, an automatic check of the system is carried out, namely the presence of an employer in the database of the enterprise, checking the hours worked and the available amount. If he is on the white list of the company, he receives an advance payment without the approval of the employer. In total, the process takes 1 to 10 minutes. Payday pays all advance for the employer own self, as you can see, and here's this slide suggests an alternative way of lending. Indeed, this scheme uses something like a bullet repayment method. The repayment period is 1 month, and the lender receives interest from the borrower's employer at the time the loan is issued. The body of the debt is returned on the day which are issued to the employees. Employees receive the difference, that is the salary minus the advance paid. This slide shows a brief mechanism for working with the enterprise. First is signing a contract, and second is technical integration. Next is issue of advance salary to the employer, and fourth is debt repayment by a firm. At the moment, analogs of this product are extremely popular in the USA and Great Britain. The most popular of them are displayed in the presentation. For example, Walmart, with 2.5 million employees, use a similar pay system. In addition to these analogs, there are enterprises that have launched this wage scheme in their own ecosystem. for their employees, thereby receiving additional income from subscriptions from their own employees. As you can see, here is earning that contacts with Uber or Starbucks, Active, Walmart and Visa, and Alipay with giants like McDonald's or Adecco. Due to the significant increase in employer loyalty, this mechanism of remuneration is also interesting to companies. During the pilot, practice showed that users of the service left applications on average 2 times a month, most of them in the middle of the month, as evidenced by the calendar of payments and receipt of advances, which is also available in the system. The main target audience is employees with a fixed salary who work without bonuses, since the system is capable of calculating only a fixed salary after deducting taxes and social contributions. The main target audience is employees with a fixed salary who work without bonuses, since the system is capable of calculating only a fixed salary after deducting. Oh shit! Sorry. Here is future opportunities. We have already started developing contactless payroll or advance payments. What does the bank gain from this cooperation? The first is additional low-risk assets. The second is an additional salary market. And in the end is the coverage of an audience with a negative credit history. I'm talking about employees who cannot get a loan. They can always get an advance by paying a small commission. That's all, folks. Thank you for the presentation. I'm finished.
Thank you, Tamerlan, for your insight and for information about the startup. Well, my next question is about the topic that I love most, because, well, in the financial services industry, as I work now for a bank, there is a gender bias. It's a predominantly male-dominated sector. Not only the banks or the financial institutions, but fintechs also. Even in the technology itself is also the male-dominant platform, so male-dominant industry. So my question is to folks that are working with B2C. I mean, how you, for example, Hassan or Nina and other guys, what about the ratio of women and men using your platform? For example, let's start with Hassan, because Nina already shared some info, but I will ask her further on to share more details about that. Hassan, can you please talk more about the ratio of women and men using that platform, and how your platform is actually helping women integrate more, and including how your platform actually giving access to the women to create the businesses?
Yes. So I would like a little bit start from the beginning of that. Creating the commerce, you need to be able to accept the payments, especially in the online world. So it will not work without that, and you will not be able to grow your business. So when we started to accept individuals and give them the chance to try their business ideas to sell product and accept payments, they encouraged it and started their dreams. Normally, when individual has an idea or doing something at home, creating some handmade stuff, but not thinking too much about making it a business, because it's fearing as an individual, like I have to start a company, then apply for the banks, get approval for the payment solution, and these barriers stopping men and women from starting their own business. So when we provided the solution for individuals and helping them to onboard in 20 seconds and able to accept payments, they tried it. And we see in the social commerce, the women are one step ahead the man. I just checked the latest statistics. I know we talked it before. It is for us like 55% to 45 woman is leading in the social commerce side. Mainly the people who is doing commerce via social platforms. And this we see that this helped them to realize their dreams. And we believe that when you help open the doors, and especially for the governments, for the regulators, which help them, the individuals, to start the business without worrying, giving them the safe ground to try. You know, if you help them to try, most of them most probably will be successful. But many people with the fear is not trying. So that's why in 3 years we reached it for 170,000 merchants for accepting payments, and 55% are them women. And we are also, in that case, started social commerce events where we make educations helping them to grow their business, not just on the payment part, but we also teach them how to advertise, how to take the photo of the product. We are inviting professionals for these events, and they are talking about it. And at the end, of course, we provide them the payment solution as well.
So basically, you're actually empowering women to start a business and grow their business. So at the end of the day, if the business is successful, it's a win-win situation for all of you, for the customers, for those women entrepreneurs, and for yourself as well.
We are also working with the NGOs, municipalities in the positive inclusion and the support side. We have special packages and campaigns for them.
Well, great. That's great. So Nina, you've shared some statistics about the ratio of the users. Can you please go into details of that? You are muted.
Yeah. Okay. So as for women in business, let's start from marketing. This is the the head of everything, because we have a special department. It's called VK for Business. They have a lot of lectures, have a lot of courses about how to start making business on the VK platform. So now we have a lot of opportunities. Just to, by one click, you can open the shop, you can create one or I don't know 100 goods inside your public, and then just start to sell them. But about marketing, we have a special grants with partnership with banks for different streams of entrepreneurs. For example, one of them was only for women. So if you're women, you have to fill the application and just to go to the contest. And if your idea or your started small business are okay and you are ready to develop it, so we can give you some support with advertising and with banks. So for example, free accounts in banks. Why not? It's very helpful for young entrepreneurs.
Well, yeah, that's great. So, I mean, there are different reasons why the startups, especially the ones that are starting, taking off the ground, are not succeeding, or actually the ones that are, for example, startups like Asans or the Shodas and so on. I mean, there are some reasons why you are not scaling fast, and I would like to actually hear the reasons. The main reason. I mean, could you please tell me the main reason? What actually halting you to, to skyrocket your sales, and who actually halting you to expand your business? I would like to address first of all this question to Gani, and then we'll switch to the Shota. You are muted, Shota, or Gani, sorry. Still muted?
Okay. Well, it is very interesting and at the same time painful question. And provided that idea is, I would say, from business end is viable and interesting, I see only, I would say, two reasons which might be, I would say, as an obstacle for you to grow further. I would say it's a lack of funding, and I would say lack access to funding, especially in our part of the world, because I would say most funding in Kazakhstan is coming from governmental sources. And if you look at the banking sector, most deposits coming from state-run companies. And lack of funding and access to funding actually is one of the, I would say, biggest, from political and economic point of view, biggest problem for us, because we don't have so-called strong entrepreneurial forces, which might be independent in the future. So that's why I would say lack of funding and access to funding is one of the factor which most startups actually at the end will die and are dying. And the second, I would say, is regulation, because we usually look at what's happening, say, in Middle East and Europe, and what we can see is actually our regulation is to some extent is reactive. Yes, for example, Astana International Center, but it's still developing, and we have a lot of challenges as a startup with our ideas. For example, we as a company in traditional legislation, as an e-money company, for example, we cannot issue cards. We don't have access to so-called banking settlement center. For example, in Europe, if you're e-money company, you can issue cards. You can do whatever you want, except, for example, you cannot attract deposits, you cannot give loans. But at the same time, you can get access to SEPA, it's like single euro payment area, basically, which gives you rights to issue electronic IBANs, and which means you can be as a so-called like electronic banking. Unfortunately, in Kazakhstan, we don't have it. So regulation is still a challenge, and we always, I would say not on monthly basis, but we always meet with the representative of central bank. And they right now only decided to create so-called sandbox. And for example, regulatory sandbox, for example, in Baltic states, in Europe, it's almost there. It's all like they created like 1 or 2 years ago. Unfortunately, we're not there. And that's why we have a lot of struggles. We're spending a lot of time how to accommodate our activity so that our activity and service will be in line with legislation. That's it. Yeah.
Well, thanks, Kenny. So as far as I understand, it's the two major points there. It's a lack of funding and the regulatory restrictions, let's put it this way.
I would say access to funding. Yeah, access to funding. We don't have a lot of options. Yeah.
Yeah. So, Shora, what is your perspective? What's the single reason, the most important reason why you can't actually boost your startup?
So basically, I would agree about the point about funding. The thing is that the geography is very important when we are talking about the funding stuff, because while there is a financial resources in Georgia, for example, and I believe that's mainly true for the region, there's no experience of venture capital, there's no experience of angel investment, and there's no basically an experience of putting your money into high risk companies. So in Georgia, for example, two things are simultaneously happening. One thing is that companies like us are learning the startup way of building the business. And on the other hand, people who have accumulated quite an amount of money through the past years are learning how to inject small amount of capital in the companies like us, which takes a lot of time. But that's understandable. So on the other hand, you have to find other ways how not to kill the company and how to still innovate and how to move forward. And the easiest, it's not the easiest, but the most obvious way to do that is to focus on the revenue, which means that you have to deliver, and you have to sell as much as possible, and you have to focus on the revenue. While if we take a look at the Western companies, we have slightly different approach where you are trying to boost the valuation of the company and do as more rounds as possible. There's no silver bullet, I understand, to solve this problem, but if you are focused mostly in the beginning days of the company on that direction, on the direction of sales and revenue generation, it slightly slows down the different processes. And one of that is, for example, in our case, I'd say that we have about 30% of Georgian market already, which is quite impressive, and we are processing about 10 to 15 million transactions per month, which is about 15% of all the transactions that are happening in Georgia. But still, going outside Georgia is quite a challenge. And additional thing that happened this year, obviously, is this pandemic stuff, which literally stopped us going out the country and talking with the banking industry in the region, because to sell to the banking industry, it's a long process. You know, it takes ideally from 6 to 9 months, but it's almost never goes like that, and it's something like from 1 year to 1.5 years. Now imagine you need a lot of capital to sustain your business and still be able to sell, and then you are forced to not to leave your country and meet your potential clients for the next year. I'd say that for our company, those are the main reasons. What's kind of slowing the business.
Yeah, that's a pity, but still, that's a problem of all. Yeah. So Hassan, what about you?
Definitely, I agree with the colleagues about the funding. Of course, it varies from the country to country in our region. But at the end of the day, it's not like in Silicon Valley or in some of European countries. When we saw it, when we started our business, we directly went for foreign investors. Now we have investors from Turkey and outside of Turkey. And now we are also talking with mainly foreign investors for the foreign market entrance. This is one side, and again, for the fintech company, of course, the regulations. For the payment company, regulations are very important. We are now represented as officially in Turkey and Azerbaijan, and we are making payouts in these two countries. But in the next month, we will launch GCC office for the 6th country there, the Gulf countries. The problem is that you can create the innovative solutions, but when it not matched with the existing regulations, when it's something innovative, then you start to struggle. And when you bring something to the bank, something innovative again, or to the government, it takes a lot of time. Even in the bank, it's from the decisions to the officially making it, launching it, open API or something, it takes minimum half year. You know, it's like a half year. Maybe for the bank is a small time, but for the startup, it's a huge time. Maybe half of its lifetime when you take the average of life of the startups. That's for us also the main two reasons. And of course, as a founder of payment solution, innovative payment solution, you always have to find the ways or find something, a gray area in the law, and use that until they make the actual one.
So, yeah, thanks for brief information. And I would like to pass the floor to Nina. I believe Nina won't mention the access to funding, but yeah, she will have interesting information to say.
Yeah, I would like to add something about regulation, because I think it's the main point of fintech reality in different countries. So in Russia, we have kind of strict regulation in this sphere. So VK based is two I'm still here.
Yes, yeah, we are.
Yeah, perfect. So two most important laws. First of all, it's 161 federal law on the national payment system. It sets out the legal framework for all financial institutions in the country and established the legal frame of organization which are connected to money flows. And it's about electronic wallets too. So the KPay is electronic wallet. So we have to be under this law. And another one, law about identification of users. It's federal law 115. It regulates AML procedures, including all aspects about KYC procedure in payment systems and other financial institutions. So
yeah, the regulation. Yeah, regulations mostly. So as our time is coming to end, I would like to summarize our talks today. There are 3 bullet points, the notes that I've taken. The first is that in the point of the Shota, and in the case of the Gani, we can see that the cooperation between the banks and fintech could actually boost the financial inclusion, so that the banks or other the fintechs shouldn't see each other as a rivals, but as a potential collaborators. So my second point is the fintech. The previously I had the questions if the fintech helping the fighting the gender bias within the industry, and the definite answer for that is yes, as we have seen it from the examples of the Hassan and examples from the contact as Nina mentioned. And the third point is about the major obstacles within the industry. It's the access to funding, and of course the main problem is still the regulatory aspects. Different countries have different regulations. Here in Azerbaijan, we also have strict regulations about that, but we are seeing some positive things in the country as of the coronavirus pandemic. So our central bank is taking steps towards the blockchain technology, and the KYC procedures are opening bank accounts remotely and so on. So that's great to hear. Thanks guys for being today with us. That was great discussion, and we have learned a lot from your markets, from your perspectives, and I wish all of you best of luck.
Yeah, definitely. You can talk about fintech for like hours and hours and hours, and it's just like a never ending, always about like ideas, like the future, the current situation, innovations, etc. So I think it was a very productive discussion in terms of looking at different markets, different countries and regulations, as Nina has stated. So thank you very much for joining us, and thank you for taking the time to during this pandemic to join and share your opinions, as well as our listeners on Facebook and on Zoom. I think it's great that we're sharing this knowledge, and for the future and for the progress in fintech markets. So thanks again, and I wish you a relaxing evening. I hope that this is not the last event that we're going to have. We're going to continue this fintech series as as we progress. So I hope that we'll be able to see you again soon. So thank you very much for attending, and thank you very much to speakers. Have a nice evening and have a great weekend.
Yeah, thanks.